everyone, and welcome to Morning Markets here at True Potential. Now, I'm joined by Paul Durrans, long-time investment director here. Paul's going to give us some colour on market moves yesterday. So, Paul, a bit of softness in markets, giving back some of the gains from earlier in the week as we approach quarter end. Could you fill in some of the detail there on what we saw?
Yeah, absolutely. So global equities, we saw mixed returns really, and you're right, there was a little bit of pullback in investor sentiment after strong gains on Tuesday, and that was on the back of a little bit of skepticism around the Russian comments that they would pull back from some of the key cities such as Kiev. So unsurprisingly that we saw weakness in European equities after strong returns on Tuesday. If we look at US equities, we saw a little bit of weakness as well, and that was led by laggards such as technology, consumer discretionary, and also financials. But if we look closer to home, the UK, the FTSE 100, we saw strong returns again, up over 0.5%, and that was led by oil and energy companies, the likes of BP and Shell, that I'm sure everybody's aware of. And that was supported by stronger oil prices, up over 3%.
And I guess that's good for some of the portfolio exposures through the FTSE 100, favouring large caps as we do at the moment. Paul, one set of data that caught my eye yesterday were the inflation prints from Europe. Do you want to comment on that for us?
Yeah, so inflation gets a lot of the headlines. It's important to businesses because they get higher prices. They've got to think about whether they pass those higher prices onto the consumer. The risk is the potential to stifle demand. It's also important to the households. You know, if you think about if prices are rising in goods and services, it means you can buy less. It also eats away at the real value of cash, especially when interest rates are at historic lows. So that's why it's important. In terms of what we saw yesterday, we had very, very high prints coming out of Germany, 2.5% over the month, higher than the expected of 1.8%. Looking at the year-on-year figure, that was in at 7.6%. That's a 48-year high, so really high readings. Unsurprising when you look at the individual components, energy prices being a key factor, food prices being a factor, but it's more broad-based. So if you look at it's coming through from leisure, hospitality, and also clothing. So you've seen inflation right across the board in Germany, but also you're seeing it in Spain. So they came out yesterday, year-on-year figure of 9.8%. To put that in context, Europe, the ECB, European Central Bank, has the mandate to try and achieve price stability of around 2%. So exceptionally high, but it's unsurprising given the dynamics that are at play today.
Now, those numbers are quite eye-watering. So I think it shows that the UK and the US are not alone in facing inflation challenges right now. Given the Bank of England have already begun hiking interest rates, given we saw the central bank in the US begin hiking just 2 weeks ago, what do we think those inflation numbers mean for monetary policy in Europe going forward?
Yeah, absolutely. So there'll be greater pressure on the European Central Bank to start thinking or start raising interest rates. But before this data came out, interest rate expectations, or the first interest rate hike of 0.25%, was expected to come through this year in Q3. The market will start to price in interest rate hikes more aggressively and in a shorter time frame.
So I guess the ECB is going to be catching up, isn't it, towards the end of the year?
Absolutely.
Yeah. So thanks, Paul. Thank you for that. And thank you for joining us this morning. Join us again tomorrow where colleagues will wrap up the quarter for you. Take care.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.